What's up guys, it's your game Mirror Forex here again, and I'm back with another video. So today guys, just like I promised you guys regarding the video of how I used my trading plan and how I took trades with my setup, and the week was relaxing. So guys, I'm going to share with you guys the trades, and I'm going to share with you guys the way I was able to manage these trades, and I'm going to share with you guys all the things I had to do in order to learn while trading, and also implementing other stuff I've learned. So guys, I don't know how we're going to do it here, but I've already done my ASR yesterday, which was Saturday, and ASR is advanced self review, where you review and write out things you've learned. So, and it's something I'll try to share with you guys as well, because I'm learning, you guys. So, and if it's something I'm learning from this, it's vital, you guys. So I need you guys to actually see it too, so that you guys can actually grab useful information concerning it. Because going through my ASR, I saw that every failure you take is just like, know that every losses you taken in the markets is a tax that you're paying to gain more knowledge about that thing that happened, you guys. Because every single losses I've taken so far in my trading journey are where I learn new things. Is either I'm learning what I've done before, that I'm repeating the mistake, and I consciously bring it to my consciousness that I don't need to repeat this over and over again. So guys, without so much talk, do not forget to like and subscribe to this channel. Like, I have this piece on how my energy goes up and down, so let's just keep it cool and calm. Okay, so let's just dive into the system and I'll show you guys. So guys, yes, I think 4 trades. That's 1 2 3 4. Yes, that's USD share, GBP, USD, and USD. So we're going to be starting with the USD chef. So this was the trade. The view is just so slow because of my network, so I think I'm going to be using more of my ASR to show you guys the trade, but I'll show you guys on trading view, then we'll go over to the ASR to show you guys more details about it. So this was the trade. Then going over to my Notion, you guys can see this was USD chef sell 1%. It was an A+ setup. So what was it I used in my trading plan? So normally in my trading plan is whenever price retraces to the fair value gap, I'm always paying attention to see how price is reacting from the fair value gap, because the bodies of these candles, as you can see, the bodies of these candles will always tell you the story you need behind what price is actually doing. So as you can see how the bodies of this candle were closing upwards below the CE, that's the consequent encroachments of that fair value gap. So this was what made me to actually hold on to this trade and trust in the trade. And I also learned that, okay, then also indeed was a beautiful trade. Manage this way by allowing trade hit take profit. So I didn't actually allow this trade hit take profit. This was the analysis. I saw that we were in a downtrend, so this was the beautiful like when I saw it before I was able to set my entry. So I saw that price swept London Q zone high, and then we had this proper displacement, and then I set my entry for price to come tag me in. So this was where I took my 1:1 partial. So when I took my partial, I was waiting for my next for it to come and hit the 1:2, but price was consolidating so much at that point that I had to just exit the trade as 1:1, but I still had to be watching the trade. And as you can see here, the trade actually went for 1:2, hit TP, and but because of this whole consolidation here, I had to leave in 1:1, because this is an hour time frame and my entry time frame is always like 15 minutes time frame. So as you can see how price matched the TP, and the thing is, because I felt I have to, like, because of my risk system, which is I cannot have two inversely correlated pairs open to risk at the same time, is me either I've taken one first and I exit one before I can take the other one. And seeing that this USD chef might just waste my whole, like, I don't know, reach the next day, I wasn't, should I say, able to hold it to the next day, because hopefully I was still expecting another trade the next day, and I didn't want my psychology to be messed up. So that's why I exited at 1:1, but looking forward to improving in that. So we're going to be going over the JPP JPY trade. All right guys, this was the JPP JPY trade, and this trade was, how I saw this trade was, in the morning I was still looking for a buy in USD, and I normally know that these two pairs, JPP JPY and USD chef, they move in tandem. But in the morning at the specific time where I look for my setup, as you can see, when I first got sugared in was I think this was where I first get triggered. 310. Yes, that was exactly like around 3:30, 3:10 at those times I look for entry towards fair value gap in the Q zones of 5 o'clock and 2 o'clock to 5 o'clock. So I saw that this trade actually meets my trading plan, but the higher time frame premise was not supporting this trade, which was we should be bearish in the higher time frame. That was me going against my trading plan. But at the same time, what I saw was a sweep of Asian range high, break in market structure, and price was consolidating, that slowing down, and then tapped into the fair value gap. And then how I managed this trade using my trading plan is during that period when this trade was showing the criteria for entry. Let me show you guys. Okay, this was when I saw the trade. As you can see, when I saw this trade in US, I was waiting for a price to retrace back to fair value gap for me to be tagged in for a trade to go. So I was like, okay, that means if price is going to be retracing back in US, that means this JPY is going to be selling down as well. You get? So I was like, okay, and there's consolidation, that's relative equal lows here. Okay, why don't I just target 1:1 and just make use of the trade? So I guess I managed the trade where by going for low hanging fruit. So this was when I was watching the price, and as I was watching this price action, I was also watching USD to see when price taps into that fair value gap, because immediately price taps into that fair value gap, this trade is bound to consolidate, then accumulate more longs to now go up. So when I was now paying attention to it, I saw that price actually immediately price hit 1:1. I exited the trade with 1% profit, but I know that it was against my trading plan, which is a higher time frame premise. We're not in it, but managing it with that 1:1 partial was something that is in my trading plan. And yes, using also the correlating pairs, that's if JPY, I can actually use two pairs too. If JPY shows the setup, I can take JPY and take USD at the same time. But at finding out that two of them are moving in tandem, I started preserving risk. And something that happened with this trade is that the market actually collected the money I made from JPY, which is now going over to the USD trade. The USD trade, as you can see, normal setup, sweep of liquidity, sweep of Asian range low, break in market structure, retracement back to FUG. That's the only setup I've been trading and trying to build myself towards it. So as you can see, guys, this was the USD shares, USD trade. But let me show you guys this trade. It was here I thought that this was the first break of market structure, and when I entered this trade, seeing the way price was consolidating here, because price is supposed to show you what immediate speed out of the fair value gap, that's to show that market is pushing back up. But once I saw this consolidation and price isn't leaving this place, let's go to my ASR. You see what I did. What I did was I was closely watching price. So when I was watching price, I told myself if price should not move immediately out of that fair value gap, like with a week, I'm going to do what? Close this trade using what happened in USD chef, paying attention to those fair value gap. So when I saw when price closed, look how this was where I first entered. As you can see, I cut my losses short as I saw price close with the body on the fair value gap. I was right, so I forecasted. So guys, this was the first entry I made, and when I saw this was the first entry, when I saw the way price was just reacting from this fair value gap and not showing immediate speed up, I was like, okay, if price should close with the body in this fair value gap, I'm going to cut my losses short. So once I saw price was coming down and the magnitude at which that candle was going, and I saw that the first candle closed with the body, I was like, damn, this, like, there is no way this trade is going to go to my direction. I had to exit the trade, and when I exited the trade, I had to reforecast, and what I was not expecting was not actually what was going to happen, because what we have this swing low here and we have this 4-hour B period. There was a reforecasting I did, so I'm going to play the video for you guys to watch the reforecasting. Okay, the thing is, this is a balanced range, this red line. So at the CE of that balanced range, it hits another block. So that's why, although the first one was like, here was a block of market structure, here price then came down. So I cut my losses short here when I saw that price was really coming down here. So I closed with, I think, $3 loss. Then when I now saw this, and I saw a proper block of market structure, and so it came to that range. So now what I'm looking at is that this balance range, the above, will become support now. because if you see how price was reacting from here, all over that price range, even here. So that's what I'm seeing. Like for price to push up, I've already taken partial, 1%, 1:1, and my full take profit is 2, 1:2 to go for this buy side. But I'm taking the low hanging fruit. I'm not waiting for it to reach here. Just 1:2. I was able to do what? To take the trade again. So I took the first trade when I saw price close below the first. I cut my losses short and forecasted and re-entered the trade with 0.15 risk. So what did I do here? When I entered the first trade, which was when I had to cut my losses short, I was already feeling emotional. You get? I was already feeling like, okay, this trade just took what I made from JPY, and this is still in the morning. So what am I going to do? So not to lose more than what I'm willing to risk for a day. If I take 2 losses in a day, I stop trading. If I take 2 wins in a day, I stop trading. If I take 1 loss in the London kill zone, I can attempt the trade again. But if I should take 2 consecutive losses, I end the day like that. So that was, I was like, okay, I don't want to lose more than what I'm willing to lose. So what am I going to do? I had to now cut my losses short, which was, I was risking only 0.25% in all my trades. But because of I've entered in the morning and I was not ready to lose more than that, I had to reduce my risk to 0.15. So that was what I had to do. And lo and behold, the trade was a beautiful one. As you guys can see, it's actually smashed to take profits. And what did I learn? I learned also that a swing and a fair value gap is a very big draw on liquidity. Very, very big draw, because when I watched this, I was like, okay, if price should tap into this 4-hour range, you could just see me, I was just watching price and predicting what price will do ahead of time. I said, okay, if price should hit, when price went up, I said, okay, price is going to retrace back to this balance range, and this balance range should do what? Act as support. Immediately price hit this balance range, price did what? Push up. So those are the things I'm learning, knowing that balance range can act as support and balance range can act as what? Resistance. And what are the key levels? Where should you be finding these key levels? Which are the monthly, daily, weekly, precisely, maybe sometimes 4 hours. As you can see how 4-hour key level was able to hold price up. So guys, going over to the next trade, which was also USD. So this trade was my typical type of trade of the market maker buy model and sell model, which is if I should take out Wednesday's low and I see a break of market structure and there's a buy side liquidity above, and also that the trade fits my plan, which is Asian range low sweep. So as you can see, this was my forecast in the morning, and this I was like, okay, price should sweep consolidation Asian range. I was expecting price to sweep Asian range low, take out Wednesday's low, and then give me my setup, as you can see. And also there was a key level which was from the daily time frame that price hit. So I was actually watching price. So when I saw price close above this candle, I took my first partial at this, as you can see where I wrote first partial. So that's where I took first partial from. This was where I entered from. So this trade again, I was like telling myself, like this trade was taking so much time to come to the fair value. I was like, no, I'm not going to enter impulsively. And lo and behold, price went to go and hit the 0.618 level, although I entered at the 0.5 level. But it's just because of I'm trying to build myself not to be impulsive in the market. And yeah, I made good profit and I was appreciative of the trade. And yes guys, I think that is all. So at the end of the day, all the things I learned are things I journaled down, and most times I still go back to all these trades to see how they played out and constantly ingrain them in my head. And one thing that I've been working again for me in my trading is understanding that every trade you're taking or any analysis you're making should have a higher time frame liquidity that is being journaled. Like something that I've been, like, should I say, a big blow on my trading is weekly draw on liquidity. Like, it's so crazy. And there's this thing I heard Sir Omar, he was like, people feel like they can't predict price, but you can actually predict price, which is on Monday can be the manipulation phase where the prices are accumulating, and then Tuesday can be the manipulation Judas swing, whereby Tuesday takes out Monday's low. And then if once you get a break of market structure on Tuesday, just know that you will now be having a weak rejection on the weekly. Like, this thing have been making so much sense. And then having key levels you think like price is approaching in the daily. So having a directional bias from the weekly, knowing that this thing is a weekly draw on liquidity, understanding that in the daily you are looking for swing highs, fair value gap that price may draw to, and understanding that in 4 hour, 1 hour, you're looking for PDR rates that price may react off from, and then in the lower time frame, that's the 15 minutes or 5 minutes, but 15 minutes is the bellwether. That's where you're looking for your buy side liquidity and sell side liquidity, which is the Asian range or any section high, previous day low, previous week low. Like, just because ICT will tell you that liquidities are engineered in these sections, and they will always come back for those liquidities that is engineered in those sections to up, like, is it purge them or something like that. So you have to always have it in mind that yes, price is hunting for what liquidity and doing what filling liquidity, and them too are also the ones that do what engineers those liquidity. So if you look at every trade I take, I have a higher time frame this. And one thing you have to know is that before price go to your intended direction, know that price is going to hunt for opposing liquidity before it does what, go for the direction you want to go to. So every time I come to the daily time frame, what am I looking for? I'm always paying attention to where price might react from, feeling inefficiency, and then before price goes that direction I'm expecting. So if you see all my, if I should show you all my forecasting and everything, what you will see me do is I have this low here, this high here, and I have this high here. I was like, okay, there's a little bit inefficiency, and today is the trading day I want to trade. What I'm expecting in price to do is price should come down, fill in this in a little gap with this candle, touch this this thing. This is the normal ICT 3 candle formation, hits this candle and then push up to go take out that high. And exactly that's what actually happened. So, and one thing I've been saying is that filling in opposing liquidity, taking out opposing liquidity before going to your direction is something that has been working in ICT concept. So having a directional bias helps. So guys, I'm going to end this video. Do not forget to do what, to like and subscribe to this channel. And yes, stay tuned for more content regarding my forex trading journey. Thank you.